All right, thanks for tuning in again today. Another ugly name in the high beta names. It is pretty hideous out there. Most of the big high beta stuff is seeing a decline, pretty serious decline. 2.5, 3, 4, 5%, 20%. Depends on if we're talking F5 or BHP. It is not pretty out there. There is some opportunity out there. We did some work on F5. We went ahead. So on Fast Money today, they had an analyst come on and talk about F5, and they said anytime under $110, they feel like there's a lot of value in the stock. We agree with that. As soon as my computer pulls it up, we'll give you the levels on it. So the first level in F5 that was critical was 130. Obviously, that got broken on the gap down. The other level was 112.12. That also got broke. So the next line of support that you're looking at is 103.60, somewhere around 103.60. Okay, so we are short. Now we're short 100, 105 put spreads out in February. We had a very small position going into options expiration in F5. We were in really good shape. We were short 120, 115 put spreads and even some 115, 110s. That didn't work out so well in a CRE-like debacle. The quarter actually wasn't that bad. It actually came in line. But right now, today, this whole week, people have had their finger on the sell button, and it's been a sell the news basically all week, unless you just pulled an Apple, which actually Apple is down $7 today. So it actually really doesn't matter. People are just hitting the sell button. There's a lot of profit taking going on out there. We actually added our own to that. We took Mosaic, BHP, and Joy Global all off the table, right? Mosaic basically announced that Cargill, its largest shareholder, is out. There's about $26 billion in overhang now, stock that's going to have to be sold. It looks like it's going to take over a year to liquidate this kind of position that Cargill has in Mosaic. There's going to be nothing but overhang during that period. And frankly, we bought it in the 40s, and there was just no shame in selling it in the high 70s. And then again today, we clean up the rest of our position. If Mosaic breaks down into the low 60s, or gosh, if it breaks 60, I will tell you right now, we will be re-entering our Mosaic position at that point, because nothing's really changed about the food story worldwide, right? There's still more people in the world this year than there was last year, and certainly much more than there was 10 years ago. All of that means that farmers must achieve a higher yield out of their crop, which means that they need fertilizer. So, potash, Mosaic, Intrepid Potash, there's an underlying bid in these stocks, but not for Mosaic. So Mosaic is just simply a supply and demand issue, and there's way too much supply coming on the market for a market that, frankly, would rather sell than buy right now. Okay, so we took down our exposure in all of those names. Anything that we were kind of marginally up that we didn't really have terrible conviction in, we just took it off the table. We are reducing our exposure, especially when we had a big gain. So we consider that you should consider doing the same. All right, so that's our levels in F5. We are short some 110, 105 put spreads in F5. Those positions that we went into today already being short for this options expiration, we went ahead and just rolled down to the 110, 105. And then for those clients that didn't have a position, we started the new position, but we started being short 195. Okay, so that's where we're at on F5. I do think that there's an opportunity here. This is not the first time that the cloud has burst. Salesforce.com is another name that we're going to take a look at strongly throughout the remainder of the day to see if there's some opportunity for put spreads. Salesforce.com is down $9.59. That is quite a whacking as well. So with these massive declines, CRE, as badly as CRE went for us last month or this month, we did actually initiate some new short positions for clients that didn't already have a position in CRE. For next options expiration, we're short the 50 45s. So obviously these big massive declines give you an opportunity to sell put spreads way below what was thought possible for the stock to go before these big declines. All right, finally, we did roll out Decker's 80.75 with the stock basically trading at around 75. There's just really no reason to hold on to hope with 1 day left. if for some reason the stock goes up $5 tomorrow, heck, we may buy back those put spreads we're short in February, just call it a day and move on with life. But for right now, we did finally get rid of the rest of those. The real challenge tomorrow is going to be whether or not Deckers can hold at $75 level. If we can see some buying into options expiration, we probably won't wait for the end of the day unless we just see a massive bounce. We'll take those short 75, 70 January put spreads off. Otherwise, we'll be rolling those suckers out to February, and then we'll see how it goes. We will get earnings in February from lots of retailers, so that's basically what we're going to have to wait for. And guidance is going to be massively important because obviously Christmas numbers should be good. It's retail's magic season, but what we want to hear is how does the spring collection look, how does summer look, what are the trends, what does inventory look like. Certainly if inventories are low, that'll be bullish for retailers. Lululemon, so far so good. As long as it holds 65, then we'll have a great trade for January OPEX. All right, thanks for tuning in again today. Good luck out there. Please trade small and keep small. We have some major concerns. China does not look like a soft landing right now. It looks, frankly, kind of ugly. And we have taken off the table PGJ, PIN, and EWZ. That's Brazil, India, and China, the ETFs from PowerShares or iShares. There's just there's really the risk reward is to the downside, right? There's not a ton of reward and there's a massive amount of risk. And so we're just taking our time today, getting smaller, hitting the sell button as often as we can to raise some cash. And for those names that we're short calls against them and we're in the money, we're going to be called away tomorrow. We're really focused on coming into February with as clean a balance sheet and as small a position as we can. And then we'll continue to do some reevaluating after OPEX on Friday. And if we need to, we'll continue to raise additional cash. So stay small out there, stay nimble, and remember, it's better to be lucky than good. So here's hoping that there's a little bit of luck on our side tomorrow. Thanks for tuning in. We'll see you tomorrow.